Would you like to know the 13 steps to create a hugely successful property portfolio? Well, that's exactly what we're going to be going through today. We're going to be taking you through the journey from start to finish to buy your first investment property and how you can use these 13 steps to buy your second and third and so on as you look to scale and grow a successful property portfolio. Now, to give you some background, I personally own a property portfolio worth over $9 million at this point in time, and the idea of building a property portfolio for me is to create more choices in my life, to spend more time with my kids, to choose what I do for work, and to have more free time and holidays each year. And so I'm someone who can say that this is possible, and I want to share these 13 steps with you today. So this is the 13 steps to create a hugely successful property portfolio, either in Australia or I'm sure these steps would generally work in the US or abroad, but this is largely focused on Australia. Now, before we dive into these steps, I just quickly want to mention Mater Hospital's Giving Day, which is coming up on the 26th of June, 2025. They've actually got some amazing donors who are going to triple the donations made on that day. And I'm planning on donating some money, so I just wanted to raise a little bit of awareness because my wife, now late wife, Emily, received treatment at the Mater Hospital, and we couldn't thank the doctors, the nurses, the staff, the researchers anymore for the work that they did in helping Emily through or during her cancer journey. So if you stay around to the end, I'll tell you exactly how you can help further raise funds for the Giving Day for Mater, so make sure you stick around to the end for that. So to kick off with step number 1 in this entire blueprint of building a successful property portfolio, that is motivation, risk, and strategy. Now on screen you can see some photos from Emily and my very first property purchase in 2018. And you can see that we were knocking out a wall there to do a kitchen, a kitchenette, and we were very proud of the renovations on our very first property. But when you're looking at your journey, you need to weigh up the motivation. So what is your why? What is driving you and motivating you to go on this property investment journey? You need to understand this in your own context as an individual and your context as a couple. Now for me, looking back at 2018 and those amazing photos that we don't actually have that many photos to be honest, because we weren't even planning on starting a YouTube channel until a couple of years later in 2020. But the motivation for me as an individual was to get away from my day job. You can see here in this photo, I'm wearing, a button-up shirt and dress pants. Now, I much prefer a hoodie and shorts and exercise gear rather than wearing a suit and tie. And so I used to work at an accounting firm here in Brisbane. My personal motivation for building a successful property portfolio was really about getting out of my day job. I just wanted someone who didn't control my calendar, who didn't control when I went to the toilet and when I went out for a walk and when I went to lunch and when I worked. I want to be flexible and autonomous. So that was my drivers as an individual. Now, the drivers for Emily and I as a couple were more choices and freedom. And I was really motivated to give Em the opportunity to not have to work a job when raising our children. And so that was a huge motivator for both of us to work really hard, knowing that we were in our 20s, knowing that we could work really hard and set ourselves up well. And so those were the key motivations for us. Then we need to talk about risk. You've got to be able to deal with controllable and uncontrollable risk. Now, controllable risk are things that you are aware of. You're able to control your savings and who you deal with in terms of mortgage brokers and buyer's agents and lawyers and things like that. But then you also have to be aware of uncontrollable risks. So what's going to happen in terms of the economy and the RBA decisions? Those are uncontrollable risks. And so this is just being aware of the controllables and uncontrollables in that journey. And then the third point in this first step of 13 is strategy. How do you reach the end destination? You need to know where you are heading in terms of this property journey. Are you looking to build out a $50 million property portfolio and do philanthropic work for the rest of your life? Or are you satisfied getting 2 to 3 houses that once you've got those houses, you can start to make more choices for your family in terms of dropping a day at work or going part-time or having 8 weeks of holidays a year to give yourself more time off because you've got those assets working for you and you've been able to secure them earlier rather than later. And so the strategy is going to look tailored to your specific circumstances. And I can confidently say that our original motivation, risk, and strategy, our original goals were around $2.5 to $3.5 million worth of property. That then grew to $5 million, and now I'm sitting around the $9 million mark. Now, I can't say I'm going to go to 15 or 20 million like these guys do. Some guys go to 50, 100 million worth of property, because I want to spend more time raising my beautiful boys, Asa and Eli. And I really do love growing and working on my business, but I also don't want to be a massive buyer's agency. I want to be a boutique specialist buyer's agency, or running that buyer's agency, Purpose Property, here in Southeast Queensland. So that's number one in terms of our 13 steps. Number two is finances. If you don't have money, there's going to be no movement in your property portfolio. Now, these photos in the bottom right corner are me tiling a bathtub and eating, I think that's a sandwich or a sausage roll or something from the bakery, from our second investment property. Now, you don't need to get your hands dirty like I am in these images. You don't need to be tiling the bathtub or renovating on your weekends. You don't have to do those things. But it can be a way to fast track your journey to allow the finances to open up. And so make sure you're working with a savvy mortgage broker. Now, if you head over to purposeproperty.com.au, you can click on mortgage broker and you can work with my mortgage broker and his team at Cube Home Loans. And the reason I say that is I work with Nevada and the team at Cube personally, and they've helped me go from $5 million in terms of my property portfolio now up to the $9 million mark. And so from wherever you're starting, if you're just saving or you've got multiple properties, it's important to have a mortgage broker that's skilled and savvy and can help you work with the banks to find the right product for you. Because if you don't have the money, there's going to be no movement in that property portfolio. Number three is structures and land tax. Now, this is something I get questioned about all the time. What do I do in terms of personal names or trust structures, and how do I distribute the funds to make sure that it's tax effective for me and my wife and our family? So you need to look at buying in the right structures. Now, there's been a lot of talk about infinite or unlimited borrowing capacity using trust structures. And there's also been a huge amount of talk the last few years around land tax, where is the Queensland government going to tax us on all our land? And what about Victoria having essentially no land tax threshold, so everyone gets charged? Now, for me, the simple form is to start in your personal names first and then move into trust structures as you get more advanced. Now, this needs to go hand in hand with your mortgage broker. You need to be able to work with the right people to make sure you're doing this at the right time. Because if you do want to get that extended borrowing capacity in trust structures, it surprises people, but if the property is going to be negatively geared, it could actually reduce your borrowing capacity. And it might take you a lot longer than you think to get that borrowing power for the next property purchase. So for me, simplicity is key. Don't go convoluted and complex. Start with simple structures. Generally, you're going to get better land tax thresholds in your personal names. And those personal name purchases are going to be more suited to capital growth style properties. And then once you want to get into more trust structures and minimizing your land tax generally, you're going to want to buy properties with dual incomes or triple incomes if you can get a triplex or essentially a multiple occupancy, to make sure that those trust structures are positively geared, which will allow you to extend that borrowing capacity a little bit further. Now, number four is the property strategies for growth. In my opinion, you should start with growth and then transition your asset base to cash flow. And so here's some 5 key strategies around capital growth. So buying below market value, market appreciation, which is time in the market, cosmetic renovations, which is something I've done for the last 6-7 years and probably not going to do a whole lot of moving forward, to be perfectly honest, because I'm looking for set and forget style deals. Then we've got land, subdivisions, and property developments, which is the space I'm starting to move into a little bit with some build projects, but I'm not going to be doing, 50 lots or 100 lots. I really like the 1 into 2, 1 into 3 kind of subdivision opportunities or builds out the back. So those are different types of growth strategies that you can look at and really are the prerequisite for you creating wealth. But for me, we needed to focus on the growth first, because that's where you create wealth, and then you can use that net worth or that equity to turn into cash flow at a later date. And so I'm currently in that transition period, looking to maybe sell down or potentially use the equity to then generate more cash flow in my residential property portfolio. Now let's take a look at step number 5, which is these cash flow strategies. So on screen, we have 5 different cash flow strategies at step number 5. So we've got dual occupancy attached, rooming accommodation, granny flats, regional locations, which can be quite popular if people are heading to Darwin for yields at the moment, or Townsville's been the talk of the town in Queensland the last 12 months. And then number 5, which is probably the least popular of the cash flow strategies, that is debt reduction. So just paying off the debt to give yourself more cash flow. And so for me, I'm probably focusing on the granny flats, or I've got a regional property as well in Coffs Harbour with the unit block there. And there's more cash flow strategies you can go into down the track, but those are 5 core ones in terms of dual occupancies, rooming accommodations, and granny flats that are really popular in terms of active cash flow strategies in the residential space. Now, a lot of people will argue that why not go, if you're talking cash flow, Luke, why not go into the commercial space? Well, it's a much smaller market in terms of market cap, the commercial space. And so in my opinion, I'm a residential buyer's agent here in Southeast Queensland, and I want a property portfolio that I don't have to think about. And in a video in the next week or two, I'm going to bring out a detailed numbers comparing my house and secondary dwelling development essentially against what the returns might be on a commercial property. Now, to give you a bit of a spoiler, commercial will generally still give you a higher net yield, 4 to 6% net before your interest costs. And the dual occupancy strategy that I'm executing is not quite as high as that. I won't reveal the numbers to you until that future video. But the thing is, there's a lot less risk for me in the residential space, and that's why I want to focus on my growth opportunities in residential property and my cash flow opportunities, because I'm playing the long game. I'm not going to hold these properties for just 5 years. I'm planning on holding these investments for 20, 30 years, and therefore the cash flow will continue to improve over time. And even though they're not as high yielding, they're also not as high a risk. So maybe a little bit lower risk and a little bit lower return than the commercial space does suit me and my risk profile. Step number 6, location, location, location. So you've gone through the first few steps, you've worked out your finances, you've now worked out exactly what type of strategy you're going for. Now it's time to select the location. So I like to look at quantitative and qualitative data and macro versus micro locations. Now for me, that's generally investing in major capital cities or major regional markets. I've currently got 6 properties here in Southeast Queensland and an investment property which is a unit block in Coffs Harbour. Now to make those investing decisions, I looked at both the quantitative and the qualitative data. And so the quantitative data is the metrics that you can measure, the median price points, the days on market, the vacancy rates, the average incomes of households. And the qualitative data would be things like, what's the look and feel? What do the locals say on terms of reviews of the local shops and schools and things like that? And you can do the same with the macro versus micro data for each location. So what is the macro around Moreton Bay, for example, as a local government area in Southeast Queensland? And what about the suburb of Bray Park, which is exactly where Emily and I are standing at the front of, which was this investment property we purchased last year to do a renovation project and to also add a granny flat, which has been successfully rented out, and I'll have to show that to you guys in a future video very soon. But the reason we chose Bray Park in this example was looking at the quantitative and the qualitative data and the macro versus the micro data of that street and suburb as well. This leads into that step number 7, which is the detailed version of that quantitative and qualitative data. You need to narrow down on the key metrics that you think are going to move the needle in terms of that suburb's price point. Now, one that we're looking at in detail in our buyer's agency, which might give you guys a huge tip if you're looking for yourselves out there, is where is that ripple effect really taking place at this point in time? The data is showing us, myself and the team, that where there's those more expensive suburbs and you've got the ring just out in that more affordable corridor, but you've got the access via train lines and main arterial roads to the business districts, those are the suburbs we're really narrowing in and focusing in on at the moment here in Southeast Queensland. There's 2 price points in particular. There's the $800 to $1 million price point on the fringe of Brisbane City, and then there's your more affordable price point in the $600 to $800K range, where there's some real gems and real opportunities at this point in time where you can buy, in my opinion, with good underlying value based on the data we have. Step number 8 is looking at the property specific criteria. So this could be bedrooms, bathrooms, land size, a value add opportunity? Do you want to do a subdivision or a development down the track? Have you had a conversation with your town planner? This is a photo of myself and a client for one of their purchases where they were looking for something in the middle outer ring of Brisbane, but good underlying value. And you can see they bought a solid 2-story brick home with a little bit of uplift potential as well, but nothing major in the short term. And so when it comes to each property purchase and the property specific criteria, that's also going to be down to you as the investor. What are you looking for? How does this property fit in terms of your bigger vision for your property portfolio? So going right back for Emily and I, properties 1, 2, and 3 were very growth and renovation focused. Property 4 was completely different in a unit block in Coffs Harbour in a regional town. And so Emily and I purchased 3 properties, one in 2018, which was our first home, and then 2 properties in 2020, which were all houses in Southeast Queensland with a growth and renovation focus. And then in 2021, we bought the unit block in Coffs Harbour, which was a completely different play to balance out the property portfolio and balance out our cash flows. So look at your own property specific criteria and narrow that down in terms of bedrooms, bathrooms, land size, what you're looking for in terms of the home and the condition of the property to help you narrow down your search for the right deal. Number 9 is shortlisting properties. Are you looking for on or off market deals? Have you built some relationships and networks with agents to get access to those types of opportunities? Are you going to be able to buy without a buyer's agent if you're buying interstate? How are you going to do that? Have you built relationships with locals or property managers to do that if you're not going to use a buyer's agent? Have you done your comparable market analysis? So how good are you at pricing properties and what they're likely to sell for and actually making reasonable offers to give yourself an opportunity to successfully secure the right deal? What about inspections? What about building and pest inspections and the outcomes of those? And handover inspections and property managers doing their pre-inspections as well? And have you done the analysis on those deals, comparing it deal by deal and running your numbers? There's actually a lot to think about in step number 9 when it comes to shortlisting properties, but these are the key items you need to tick off your list to make sure you're shortlisting the right deals and that you're actually getting access to the right opportunities so you can secure your next investment property purchase. Number 10 is negotiation. So the secret to saving money and feeling like a winner. Now, you don't always need to feel like a winner, like that's probably a little bit strong to be honest, but sometimes you want to think about win-win situations. So when you're sitting down and negotiating with another party, every selling agent is going to be different. That's why as a buyer's agent, we specialize in Southeast Queensland because we run into the same agents all the time and we can build relationships with them over years, which do give us a competitive advantage in the day-to-day negotiations on certain deals. Now, you can do this for yourself. You can build rapport with selling agents. You might miss out on a deal, but when it comes to the right deal, sometimes you want to create what feels like a win-win situation. So if the seller wants a bit more money, can you get slightly better terms for yourself? Or if you're willing to waive the building and pest, can you get a discount based on the gutters and eaves being a little bit damaged or rusty or needing replacement? And so there's some to and fro you need to learn, the dance of property negotiation, but it's a very important skill set you must have because life is a negotiation, and if you want to get a deal done, you need to be able to have a conversation and negotiate on the right opportunities. Number 11 is contracts. So you need to have lawyers and solicitors review the contracts, the cooling off periods, the finance clauses, the building and pest clauses, and the list goes on in terms of clauses in contracts these days. But it's very, very important that you do review the contracts and you do understand exactly what you're signing. This also goes for mortgage documents because, in my opinion, getting the financing and signing the contracts on purchasing deals is so important. And it's the reason that Emily and I were able to build a property portfolio where we could build our dream home together. And we could rent an Airbnb when she was going through her cancer journey and this project was dragging on. And we could continue to buy investment properties with a hope for a future. And so I think it's important to look at contracts, have the right people in your corner reviewing them, and make sure you don't skip step 11. Step number 12 is good management. An asset well managed will pay dividends, and that's true. And this is our timeline in the bottom right corner. 2016, Emily and I got married. We were saving hard, and then 2 years later, we were able to buy our first property in 2018. Another 2 years, and so it's been 5 years since the start. we were able to buy property number 2, and then at the end of 2020, we were able to buy property number 3. And because of those 3 purchases, we're then able to buy the unit block in property number 4, and then continue our journey on growing our family and working towards building our dream home. And so management is also managing on your side as well, not just the property manager. No one's going to take the reins and take control of this property journey more than you. So step number 12, put a good asset manager in place, but also see the vision year to year of where you're heading and how you can take the next step towards your end goals. Which leads me to number 13, which is review and go again. Now, this is going back to step number 1, reviewing all those steps for the next property purchase and how you can execute on a successful next purchase and continue growing that asset base over time. Now, every single step that we've covered in today's video is actually in the property investment course called Invest with Purpose. Now, I'm very open and honest in saying that you do not need a property investment course. You do not need a buyer's agent. You do not need to pay anyone for you being able to potentially go out there, start and scale a multi-million-dollar property portfolio. But in saying all that, there can be great value in paying for a course or paying for a buyer's agent for the right person at the right time. In terms of the property investment course, we go through those 13 steps in detail. There's also a 100+ slide deck. And the biggest thing for me is value. It's about bringing you guys value here on the YouTube channel in terms of the property investment course and in terms of the buyer's agency services that myself and the team provide. And so if you believe that there's going to be value, that's also based on the price. Now, the course that I sell is around $1,500. And a lot of these other buyer's agents and YouTubers and property gurus are selling courses around $5,000, $6,000, or $7,000. And so in my opinion, that's why Emily and I were always very wary of how we price the course. We tried to make it more affordable, also give a lot of those gold nuggets and secrets for people who want to do it themselves. And so that's exactly what it is. That's what this course is here for. If you're thinking about doing it yourself and you want the detailed step-by-step guide on investing in real estate with those 45+ lessons and the 100-course slide deck, head over to purposeproperty.com.au and click on course to check it out. Now, I just wanted to mention that there is 10% of course sales in the next week. We'll be going to this giving day that the Mater Hospital is raising funds, and there's some great donors tripling the funds. So if you buy a course for $1,500, 10% of the revenue will be going to the giving day in the next week. And I also wanted to mention this recent review we got on Google, which I just thought, brightened my day, and it's always great to see people getting value out of the course. So Tui Tarina says, I found this course to be hope. Well, that's very nice. It has so much worth. I highly recommend to anyone wanting to buy their own properties and create their own portfolio. Luke is easy to understand and is easy to listen to throughout. You've helped my partner and I move closer to our financial freedom. Thanks. Tui and Walter from Legacy Properties. And that's what this is all about for me. Like, I've made hundreds and hundreds of YouTube videos, and I say to people, you can watch and read books and watch YouTube videos for free. You do not need a course. You do not need a buyer's agent, but there can be value in fast tracking your journey or fast tracking your knowledge, because that's how you de-risk. That's how you remove some of the uncontrollables into the controllables when you understand more around this property game. And so if you are looking for the course, awesome. If you're not, hopefully you get great value out of these YouTube videos. And if you're looking for a Brisbane-based buyer's agent, head over to purposeproperty.com.au. We buy all over Southeast Queensland, including Moreton Bay, Brisbane, Logans, Redlands, Ipswich, and we also buy in the Gold Coast. So head over to purposeproperty.com.au if you're interested in that, and click on this video over here for more things real estate, renovating, and financial freedom. See you in the next one. Peace.